All right, so I'm going to give you guys the rundown on Chapter 8 here, title insurance. So title insurance is a really unique type of insurance. It's an insurance where, you take out other types of insurance like flood insurance, homeowners, life insurance. That's in case things happen in the future. Title insurance, though, that covers things that happened in the past. So as far as the title insurance coverage is concerned, it covers both matters of record and also not of record prior to the owner's acquisition of title. After you purchase it, anything that happens after you've bought, title insurance doesn't cover. So the first thing I'm going to put on the board up here, two really unique things about title insurance. Number one, it covers the past. It does not cover the future. So it covers both matters of record and not of record prior to the owner's acquisition of title. And number two, it's a one-time premium payment. So if you take out, let's say, maybe like a homeowner's policy, maybe you pay it on a monthly basis. Other types of insurance, health insurance, you might pay that on a monthly basis, but title insurance is just a one-time premium payment up front. So for starters here, number one, it covers all matters of record and also not of record prior to the owner's acquisition of title. And number two, as I said, it's a one-time premium payment. So just one premium payment's made. So again, one-time premium payment. So these are the two main things to take note of to begin with here. So for title insurance, again, it covers both matters of record and not of record prior to the owner's acquisition of title. And number two here, one-time premium payment. If you need to pause the video to take a note of this, make sure you get this noted down, and then we're going to move on to the next section here. This is on page 221 in your textbook, and what we're going to talk about now is, how would they find out what's on the title? So how would they find out things like, what's known? For instance, again, it covers both matters of record and not of record. So how do they figure out the matters that are on the record? The way they do that is by searching the public records at the county seat. So what we're going to talk about now is recording. So I'm going to put this up here, recording. So first and foremost, one of the first things I'd say to probably know about recording is that it's not required. So nobody's required to record liens. Nobody's required to record deeds. Nobody's required, even a bank's not required by law to record like a mortgage lien. But do they often get recorded? They always get recorded for that matter. So the first thing to write down for recording before we get into it, it's never required by law. Everything gets recorded for the most part, things like liens, deeds, things like that. And the reason why that's important is because these lien holders, they're paid out based on the order of recording. So we're going to talk all about recording now. The first thing just to write down, though, it's not required. So for recording here, number one, it is not required. So the question becomes, if it's not required, then why do people do it? The reason why people do record documents, it provides what we call constructive notice. Well, constructive notice means that once a document is entered onto the public record, then every single member of the public is assumed to know about that as a fact. So, give you guys an example, a house that I own. Everybody who's watching this video, that deed has been recorded. Everybody watching this video, you're assumed by law to know I own that home. Why? Because it's recorded at the county seat. And when you record a document, you put it onto the public record, then every single member of the public is assumed to know about that as a fact. So, the next thing I'm going to write up here, what does recording accomplish? It accomplishes what we call constructive notice. But what constructive notice means is that once a document is entered onto the public record, then every single member of the public is assumed to know about that as a fact. So, number two here, recording provides constructive notice. That means once a document is entered onto the public record, then all members of public are assumed to know as fact. So again, recording provides constructive notice, which means, once a document is entered onto the public record, then every single member of the public is assumed to know about that as a fact. So that's number two here. Number three, why do people record? Like, if it's not required, why do you record? Well, the main reason really is because what recording does, it sets priority of lien holders. So lien holders, people that you owe money, creditors, they're paid out on your house based on the order of recording, not based on when they did the work. And I'll give you guys an example. So let's say I had an electrician and a plumber do work on my house. I'm doing a renovation. The electrician did his work in March. The plumber did his work in April. I didn't pay either of them. Even though the plumber did his work in April, the electrician did his work in March, if the plumber files his lien first, in the case of foreclosure, the plumber gets paid first. Why? Because lien holders, they're paid out based on the order of recording. So number three, the next thing that I'll note up here, is why do people record? They record because it sets priority of lien holders. Lien holders are paid in the order of recording. So number three here, recording, it sets priority of lien holders. Except for one lien. There's one lien that's going to take precedence over all. You can completely basically wash recording off the books. The one lien that takes precedence over all liens is a property tax lien. So I could have, 1,000 liens on my home hypothetically. The second I don't pay my property taxes, property tax liens become first priority liens. So if they were to ask you like what lien takes precedence over all liens, it's going to be a property tax lien. So, and I'll note that here too. So property tax lien takes precedence over all liens. And they might also ask you, where would you record if I need to record something? You would record at the county seat. So every county has a county seat. You don't go down to your town hall to record. You go to the county seat. So in Bergen County, that would be in Hackensack. In Passaic County, Patterson. Essex County, Newark, so on and so forth. So if they were to ask you, where do you record at the county seat. So recording gets done at the county seat. And they might just ask you, what has to be done prior to recording? You must acknowledge the document prior to recording. That really means kind of the same thing as notarization. We just call it acknowledgement on the test. So that's somebody witnessing you freely and voluntarily signing this document. So if they were to ask you what must be done prior to recording, you must acknowledge the document prior to recording, which means somebody has witnessed you, freely and voluntarily sign off on these things. So if they were to ask you what must be done prior to recording, you must acknowledge prior to recording. So number 6 here, you must acknowledge prior to recording. So again, you must acknowledge prior to recording. So these are really the 6 main things to know for recording. So number 1, it's not required. You don't have to record anything. Number 2, the reason why people do that, it provides constructive notice, which means once a document is entered onto the public record, every member of the public is assumed to know about that as a fact. Number 3, really the important reason, recording sets priority of lien holders. Lien holders are paid based on the order of recording, except, of course, for the property tax lien. That takes precedence over all liens. The next one here, where do you record? You go down to the county seat to do that. And last but not least, what do you have to do before you record and put it onto the public record? You must acknowledge it prior to recording. So an acknowledgement, basically kind of the same type of deal as notarization. It's somebody witnessing you freely and voluntarily signing a document. So in regards to the acknowledgement, if they ask questions about this, they could ask who takes an acknowledgement versus who gives an acknowledgement. So the acknowledgement is taken by a public notary or an officer of the court, and it's given by the party signing the instrument. Think of it this way. If I sign a deed, I'm signing that document, then I'm giving it off to a public notary or officer of the court to put that onto the public record. So if they ask you who takes an acknowledgement, it's a public notary or an officer of the court. Who gives it? The person signed the instrument. So that's acknowledgement and recording here. So if you guys turn the book, this is on page 222. On the left side of page 222 here, number 1 is probably the only one that's really important to note. What are the prerequisites for recording? So if you want to record a document, put it onto the public record, one of 2 things. It's either got to be in English or have some kind of English translation along with it. So if you want to record something in Spanish, okay, but you have to have an English translation along with that. Like historical background, we don't have to know what year this started and things of that sort. We don't have to know all the historics on it. So if you guys go to the right side here at page 223, it talks about exclusions and exceptions. So, if they were to ask about what are some common ones are like, governmental examples. So, give you guys an example. This is on the right side here at page 223. Governmental police powers. So what police powers are, those are any public or any governmental restrictions on what you can and cannot do with your property. So if the government's going to come in and they're going to condemn the property because they want to build a new state highway where your home is located, well, that's not what title insurance is for. Title insurance might be for, like, let's say a spouse didn't sign off on her dower right and her husband sold the property without her signature. She can then try to come in and claim the property, and then you would file a title claim in that case. So that might be where that comes into play. But in general, again, title insurance isn't going to cover things like condemnation if the government wants to condemn your home, things like that. So those are things that we don't have to worry about. So let's turn the page here. Let's go to page 224. So on 224 on the left side here, you're going to see two bolded terms that we're going to talk about up here now. The abstract of title and the chain of title. So the abstract of title, we like to say that's either a condensed history or a brief digest of title. So essentially what that means, it's kind of like if you read the back of a book. You read the back of a book, it tells you what that book's about. That's kind of the abstract of title in regards to the title insurance policy. Now, it's a lot more than that, but that's if we're just trying to really, make it basic to you. So with the abstract of title, and I'll write this up here, they might say, which of the following best describes either a condensed history or a brief digest of title? That's going to be called the abstract of title. So let me get this up here for you. So again, the abstract of title, we say that is a condensed history or a brief digest of title. So again, a condensed history or a brief digest of title. And then the second bolded term here is a chain of title. Now, the chain of title is a succession of owners, so one owner to the next. So John sold to Joe, Joe sold to Nick, Nick sold to Mike, Mike sold to Andy, so on and so forth. So over that span, you're seeing who has sold to each other. Now, the reason why this is also important is because on top of asking, like, which of the following best describes a succession of owners, which is going to be the chain of title, they could also ask, what if there's a break in that chain of title? What if the sales went from John to Joe, Joe to Nick, and all of a sudden Jack to Mike? They're going to say, how the hell did Jack get that property? So in a situation like that, you have to determine, what is that called? That's a break in the chain of title. Now, a break in the chain of title, if you have one of those, how would you clear that up? You'd clear it up through what's called a quitclaim deed, and that's something that we're going to talk about in detail in Chapter 12, but in general, the quitclaim deed, that's a type of deed that we use to remove a cloud on title. So the deed that we would use to remove that cloud on title, we would call a quitclaim deed. That process in itself, we would call, we're going through with an action to quiet title, or a quiet title proceeding. But before we get into that, for starters, what I want to write up here is the chain of title. So definition-wise, we say that is a succession of owners, so one owner to the next. Now, more importantly, if the chain of title is broken, if there's a break in the chain of title, how would we clear that up? We'd clear it up through a quitclaim deed. So again, here, the chain of title, that is a succession of owners. We'll look something like this: Joe to Nick, then Nick to Mike, then Mike to Andy. So that's how this would work here. And then let's say all of a sudden Jack tries to sell the property to Dimitri. Well, in a situation like this, if Jack's trying to sell it to Dimitri, Jack's probably a little scam artist here. So what wound up happening was, it went from Joe to Nick, from Nick to Mike, from Mike to Andy. The next transfer should have been from Andy to somebody else. But in this case, Jack's trying to sell it to Dimitri. So maybe Jack, like a little weasel, found a deed on the street, and he said, oh, let me try and rip off this guy Dimitri real quick and, sell it off to him for a fee. Well, to avoid that, Dimitri's a smart guy, so what he's going to do is he's going to have a title search done. So when he has a title search done, his title company's going to come back and they're going to say, hey, Dimitri, this guy Jack's a real scam artist. Andy's actually owner of record here. Jack doesn't even own the property. So let's say Dimitri goes back to Jack and he yells and screams at him, and then Jack says, no, I bought it from Andy in 1995. So what the title company would then do, go back to Andy, and if Andy says, yeah, you know what, I actually did sell it to Jack in 1995, I don't know why that's not on the records, in a case like that, what's going to wind up happening, they're going to have Andy sign a quitclaim deed over to Jack. By doing so, that's Andy releasing any interest he has in the property, because when you sign a quitclaim deed, you're just transferring the interest of the grantor to the grantee. Whichever interest that is, could be fee simple, could also be all the way down to nothing at all. So by Andy then signing a quitclaim deed over to Jack, that's Andy completely and totally releasing any interest he has in the property off to Jack. Now Jack can sell to Dimitri, and all is well at the end of the day. So this is what we call a break in the chain of title. So, and I'm going to write this up here, in the case of a break in the chain of title, how do you clear that up? You clear it up through what we call a quitclaim deed. That's a deed that we would use. So, again, in this case, the break in chain of title, a quitclaim deed is used to remove the cloud on title. So again, with the break in the chain of title, a quitclaim deed is used to remove the cloud on title. So again, if you have a break in the chain of title, it creates a cloud on the title. The best way to remove that is via quitclaim deed here. Now this quitclaim deed is the instrument that we use. If they were to ask you what the process is called, it's the process we would call either an action to quiet title or a quiet title proceeding. So if you want to write that down, you can pause the video and write that down as well. We'll either call it an action to quiet title or a quiet title proceeding. Okay, so next here in your textbook, if you go to the left side here of page 225, it gets into talk about things like examination of title and things of that sort. The important part, I think, to note for this, they might ask you sometimes, what's the best evidence of a good title? The best evidence of a good title is not a title search. Let's say they do a title search. If they just do a title search, they can find a ton of things that are wrong with the property. However, by issuing a title policy, that's them saying we've done our title search, we did our due diligence, we're willing to, let's say you pay us, whatever, any amount of money, just hypothetically, let's say $7,000, and we're going to provide you with $500,000 worth of coverage. So that's pretty strong evidence that the title company thinks is a good title. So if they were to ask you on the test, what's the best evidence of a good title? It's going to be a title insurance policy. So again, the best evidence of a good title is going to be the title insurance policy. Let me just write this up here. So again, the best evidence of a good title is a title insurance policy. So again, the best evidence of a good title that's free and clear of defects would be a title insurance policy. Not a title search, because again, a title search can find a ton of things that are wrong with that title. So again, best evidence of a good title would be a title insurance policy. All right, and then next here, if you guys turn to page 226, we're going to talk about the owner's policy versus the loan policy. So for starters, before we kind of get into the details, just first, if you want to know, the owner is going to pay for both of these. So when you take out a loan to buy a home, the lender is going to require that you buy a title insurance policy for them as well, because they want protection, because God forbid there's a prior claimant on the property. Their collateral for that loan they gave you was that property. So if you lose that property, they need to make sure they're getting paid too. So they're going to make you buy a title insurance policy for them as well. So for a title, and again, just write this down before I write up the details here. The title policies, both the loan policy and the owner's policy, they're both typically paid for by the owner. Now, again, all these things can be negotiated. Anybody can negotiate, well, I'll pay for it, I'll pay for it. But typically, if they do ask about it, the owner is going to pay for both of these. Then I'll write the details up here. So first and foremost, again, the owner's policy, loan policy, both of them are going to be paid for by the owner. So let me just write a couple things up here for them. And we have the owner's policy and the loan policy. Now, for starters, they might just simply ask you, who's covered by each. Well, the owner's policy is for the coverage of the borrower or the owner. The loan policy is for the protection of the lender. So for starters here, the owner's policy, this here protects the owner. And for the loan policy, this here protects the lender. That's number one. Number two, now the coverage certainly differs. So the coverage for the owner's policy is typically going to be equivalent to the purchase price. The coverage for the loan policy, that dwindles over time. So the coverage for the loan policy is equivalent to the outstanding loan balance. So let's say my initial loan balance was $500, but 10 years in, my principal balance now is, let's say, $375. The coverage has now dropped to $375. So for the loan policy, that dwindles over time. The owner's policy, the coverage is equivalent to the purchase price. The loan policy, the coverage is equivalent to the outstanding loan balance. So for the owner's policy, here coverage is equal to purchase price. And then for the loan policy, they were to ask about this, the coverage is equal to the outstanding loan balance. So here, the coverage is equal to the outstanding loan balance. So again, the coverage for the owner's policy is equal to the purchase price. For the loan policy, it's equal to the outstanding loan balance. So those would be how the coverages do differ there. And again, remember, both of these are typically paid for by the owner. And then let's see what else here. So on page 227 on the top left, it talks about other policy forms, namely here, like, where else could you get a title insurance policy? Now, if you wanted to, you could get a title insurance policy on anything. But obviously, if I'm renting a house for a year, I'm probably not going to be taking out title insurance. So here what it talks about is like different types of leasehold estates. So give you guys an example. Let's say I have a ground lease. It's a 50-year lease, a ground lease. I can make any improvements or additions I want to that land, but ultimately when that lease comes to an end, any improvements or additions that I do make, they ultimately do belong to the owner at the conclusion of term. So if I'm going to be making improvements on this land, I might want to take out a title insurance policy. So nothing would stop me. I could certainly do that. So for the other policy forms, you could take out a title policy on anything that you even lease for that matter, but it's not always going to happen. Most of the time you're taking out a title policy because you own a home. And also one more thing I want to note. So title, and this is not in the book here necessarily, it's in here, but it's not bolded or anything. Title insurance policies, they're not assignable. So if I'm selling my home, I can't tell the buyer, hey, I just bought this thing 2 years ago, I'll just assign you my title policy so you don't need to take out a new one. It doesn't work that way. There used to be different things with title insurance where you could actually do some kind of back title, but it's a little different now. Just the one thing just to write down right now, you cannot assign your title policy to a buyer. Now, hypothetically, if you die and you leave your property to your heirs can inherit the property and keep your current title policy. That's another story. But if I'm selling the property, I can't allow the buyer to take over my title insurance policy. I can't assign it to them. So if they ask you, is title insurance assignable? I can't assign it to a buyer. Again, if I die, I want to leave my property to my kids. In that circumstance, my kids can, keep my title policy intact. But again, you cannot assign it off to a buyer. And one thing it mentions here towards the bottom right of 227, it's a bolded term called subrogation. So let's say that this woman did not sign off on her dower right when her husband sold the property last year. She's coming in to claim this property. So it doesn't matter what the claim is. Let's just say it's any claim. If somebody submits a claim against that title because they want the property back, you don't just call up your title company and say, hey, just send me a check for $600,000. That's what I bought the house for because John Smith just put in a title claim. It doesn't work that way. The title company has what we call a right of subrogation. That's the right, what we say, to step into the shoes of the insured and then fight off any claims against title. So for example, if somebody does submit a title claim, the title company is not just like, yeah, let me write a check real quick. The title company says, we want to fight this off because rather than write a check for $600,000, let's spend like $10,000 on legal fees to see if we can fight this off to save ourselves some money here. So subrogation, again, I'll just write this up here. We say it's the right of the title insurance company to step into the shoes of the insured individual and fight off any claims against title. So you call that subrogation. This would be the right of the title insurance company to step into the shoes of the insured and fight off any claims against title. Again, subrogation, this is the right of the title insurance company to step into the shoes of the insured individual and fight off any claims against title. That's called subrogation. And And then also here, just on the bottom right at 227, talks about endorsements. So if they want to make any revisions to the policies, we would call that like an endorsement. So words that are similar to endorsement that you probably have heard before: endorsement, amendment, revision, rider, just changes that are made, or things that you're adding on or taking out. So in regards to a title insurance policy, if you wanted to revise that, we'd probably call that an endorsement. We're making an endorsement on the policy. We're changing the policy up. So that's if you wanted to make a change to that. So again, the intention of this video is to kind of like do the quick summary of Chapter 8, in this case, title insurance. So I'm trying to make a whole bunch of these videos for all the chapters. So hopefully you guys enjoyed this video. If you guys have any questions, feel free to, email me. My email is kylekovats@gmail.com. So when watching this video, if you thought it was good, by all means, feel free to, place a rating on it or make a comment on it. If there's anything that I can improve upon, other than my handwriting, because unfortunately that's probably not going to change, feel free to reach out to me as well. So again, talk to you guys soon, and I'll see some of you in class very soon. Thank you.